Welcome to this explainer. Today we're diving straight into something seriously fascinating from our source material. We are looking at a strategy that the text calls the 14-day wealth shield. Let's dive into section 1, the tax-free windfall. Because the ultimate goal here is keeping your money right in your hands. I want you to imagine, just for a second, opening your mail and getting a check for thousands of dollars. Awesome, right? But now imagine that the IRS is legally not allowed to touch a single penny of that money. No way, right? It sounds almost too good to be true, kind of like some sort of accounting myth. But according to the Augusta Rule Mastery Guide we are reviewing today, generating 100% federal tax-free rental income is an entirely real, totally legal provision available to you. Now, to understand why this strategy is being talked about with such urgency in our sources right now, we really have to look at the economic context they provide for the year 2026. $39 trillion. That's a massive national debt figure cited in the text. I mean, that's a number so big, it's kind of hard to even wrap your head around. The source argues that with a national debt this huge, the government is essentially hunting for your money. Now, obviously, we aren't here to take any political stance on tax policy or government spending, but we are here to impartially explain the source's viewpoint. And their viewpoint is simply this. In this specific economic environment, establishing what they call a legitimate wealth shield isn't just a nice idea anymore, it is absolutely essential to protect your earnings. Moving right along to Section 2, Decoding the Augusta Rule. Let's look at the concrete legal reality behind all this. To bridge the gap from that giant economic context to the actual on-the-ground execution, the source material introduces us to Brian. He's a CPA from a platform called Hidden Tax, and his professional philosophy is crystal clear. He says, "We skip the economic theater. No hacks, just math." That quote is super important for us today because it establishes the strong professional authority behind this whole strategy. We aren't talking about some shady, under-the-table trick or a weird legal gray area. According to the certified public accountant, this is a strict, numbers-based application of the tax code. Now, what's absolutely crucial to understand is the specific legal mechanism at play. Officially in the tax code, it's known as Section 280AG, but most people just call it the Augusta Rule. The text defines this as a minimal rental use rule, and the parameters are incredibly specific, which is exactly where the math comes in. Basically, the rule allows you to rent out your personal home for 14 days or less per year, and if you stay within that exact time limit, you get to keep that rental income 100% federal tax-free. Not mostly tax-free, 100%. All right, let's jump into Section 3, the board meeting strategy. Let's see the actionable steps. Let's move to the execution phase and see how this builds across 3 very practical steps laid out by our source. Step 1 is super simple in concept. You host a legitimate business board meeting right inside your own home. Then, moving to Step 2, you officially rent your home to your own business for that purpose. You just have to ensure that across the entire year, it falls strictly under that limit of 14 days or less. And then Step 3, the grand finale of the strategy, you personally pocket that rental cash 100% tax-free. You are, quite literally, acting as the landlord to your own business for a couple of days a year. And this brilliantly illustrates the true genius of the strategy, highlighting this amazing dual-action financial benefit. This is where the wealth building really accelerates. On the business side of things, your company is paying for a legitimate meeting space, which means it gets a perfectly legal tax deduction, lowering your company's taxable income. But then, over on the personal side, as the homeowner, you're receiving that rental payment from the business, and because of the 14-day limit of the Augusta Rule, you pocket it entirely tax-free. It's basically a two-sided win where you legally move money from one pocket to the other, shielding it from taxes the whole time. Which brings us to our final section, Section 4, Building Your Financial Fortress. The source material actually wraps up with a pretty intense rallying cry. Their perspective is that taxpayers need to stop being sitting ducks while the government prints trillions of dollars. Instead, they strongly advocate for using targeted strategies like the Augusta Rule to legitimately nickel and dime the IRS. According to the text, building this kind of financial fortress is an absolute must if you want to see your net worth explode past that notoriously difficult first $100,000 mark. And finally, they encourage viewers to subscribe to their platform Hidden Tax just to make sure they are continually keeping the math in their favor, year after year. So the crucial point we are left with is this. Knowing that provisions like Section 280AG exist completely within the legal bounds of the tax code, will you leave your hard-earned money on the table? or will you take the math-based steps outlined by our source material to build your own tax-free fortress starting today? It really is a fascinating look into how simply understanding the rules of the game can fundamentally shift your financial trajectory. Thank you so much for joining me for this explainer, and I really hope this structured dive into the Augusta rule has given you plenty of powerful ideas to think about.